Hey everyone, welcome back to the channel. Now, if you're looking to build long-term wealth and achieve financial freedom, it's time to learn from the best. I'm talking about Warren Buffett. He's not just a billionaire, he's a legend who has consistently outperformed the market for decades. So what's his secret? It's about having a smart money mindset and a time-tested strategy. In this video, we're diving deep into Warren Buffett's investment philosophy, breaking down his key principles so you can apply them to your own financial journey. Let's rewind the clock and explore the origins of Warren Buffett. He wasn't born into wealth. Growing up in Omaha, Nebraska, his path to becoming one of the world's wealthiest individuals began with a modest paper route. From a young age, Buffett was hustling, delivering newspapers and selling chewing gum and Coca-Cola door to door. By 11, he had already purchased his first stock, indicating an early fascination with investing, and by 14, he was managing his own side businesses. The key lesson here? You don't need a trust fund or affluent background to start building wealth. Buffett's journey illustrates the importance of taking action, regardless of how small. It's about cultivating a strong work ethic and recognizing that financial success is a marathon, not a sprint. Buffett's early experiences underscored the value of patience, persistence, and the power of compounding. These are timeless lessons that continue to influence his investment approach today. Warren Buffett is a legendary investor, but his journey to success was not a solo endeavor. A key figure in his life was Benjamin Graham, often hailed as the father of value investing. Graham's book, The Intelligent Investor, profoundly influenced Buffett. It introduced him to a revolutionary way of thinking about investments. While many chase after the latest trends or try to time the market, Buffett, guided by Graham, understood that true investing goes beyond mere speculation. It's about grasping the intrinsic value of a business. Graham taught Buffett to seek out undervalued companies, those trading below their true worth. Imagine it as discovering a hidden gem at a flea market. That's the core of value investing. This philosophy deeply resonated with Buffett and became a foundation of his investment strategy. He learned to be patient, to tune out market noise, and to focus on finding those hidden gems, companies with strong fundamentals and long-term growth potential. This approach has proven to be incredibly successful for him over the years. When Warren Buffett discusses investing, he frequently uses a fascinating analogy: the moat. In the business world, a moat signifies a company's competitive edge, something that makes it challenging for rivals to capture market share. It's that unique element that distinguishes a company from its competitors, safeguarding its profits and ensuring its long-term prosperity. Consider this scenario. Imagine two businesses, both selling coffee. One is a small independent shop, while the other is a global powerhouse like Starbucks. What advantages does Starbucks possess? Firstly, it has brand recognition. People worldwide recognize that green logo and know what to expect when they enter. That's a formidable moat. But it's not just about branding. Starbucks also enjoys economies of scale. They can secure better prices for coffee beans and supplies due to their bulk purchasing. They have an efficient supply chain and an extensive distribution network. All these elements contribute to their moat, making it tough for smaller competitors to match their price or convenience. When Warren Buffett seeks companies to invest in, he looks for those with substantial moats. The goal is to identify businesses with something unique, something that sets them apart and makes them more resilient to competition. Chapter 5. Buffett's biggest wins and misses. Now let's dive into some of Warren Buffett's most notable investment decisions. One of his greatest investments is Coca-Cola. Buffett first invested in the beverage giant in 1988, and it's been a cash cow ever since. He saw a durable brand and a consistently profitable business model. Another home run is American Express. He valued their strong brand and loyal customer base. And let's not forget Geico, a cornerstone of Buffett's portfolio. He recognized their low-cost model and tech leverage. These examples highlight Buffett's knack for finding strong businesses. But even Buffett has made mistakes. He passed on early investments in Amazon and Google. He didn't grasp their potential in the early days. He was hesitant to invest in unproven models. In hindsight, it's easy to say he missed out, but these misses highlight an important lesson. Even the best investors don't always get it right. Investing involves risk. By sticking to his principles and learning from mistakes, Buffett has achieved remarkable success. Chapter 6. Buffett's personal spending habits. What's fascinating about Warren Buffett isn't just his investment prowess, but also his surprisingly frugal lifestyle. Despite amassing a fortune, Buffett has remained remarkably grounded when it comes to his personal spending habits. He's living proof that you don't need to flaunt your wealth to be happy. In fact, he still resides in the same modest home in Omaha that he purchased way back in 1958 for a mere $31,500. Now that might seem unbelievable considering his net worth, but Buffett doesn't see the need for extravagant mansions or sprawling estates, and it's not just his house. Buffett is known for his practical approach to transportation as well. He's not one to cruise around in flashy sports cars or private jets. In fact, he drove the same car, a Cadillac DTS, for years before finally upgrading to a newer model. But perhaps the most telling example of Buffett's frugality is his love for a good McDonald's breakfast. That's right, one of the world's wealthiest men starts his day with a meal from the Golden Arches. Now you might be wondering why someone with billions in the bank would choose to live so modestly. The answer lies at the heart of Buffett's investment philosophy. It's not about how much money you make, but how much you keep and how you invest it. Buffett understands that true wealth isn't about ostentatious displays of luxury. Chapter 7. Buffett's Philanthropy. While Warren Buffett is renowned for his investment acumen, he's equally notable for his generosity. He believes in leveraging his wealth to create a positive impact on society. Buffett has committed to donating 99% of his fortune to philanthropic causes through the Giving Pledge, an initiative he co-founded with Bill Gates. This initiative encourages the wealthiest individuals and families to dedicate the majority of their wealth to charitable endeavors. Buffett's dedication to philanthropy is truly remarkable. He is particularly focused on supporting education, healthcare, and poverty alleviation. His contributions have funded numerous initiatives aimed at improving lives worldwide. One of his most significant contributions is his ongoing support of the Bill and Melinda Gates Foundation, the largest private charitable foundation globally. Buffett's choice to donate the majority of his wealth reflects his character and values. His philanthropic spirit is a powerful reminder that financial success can also mean giving back. Chapter 8. Buffett's Advice for Individual Investors. Now for the moment you've all been waiting for, Warren Buffett's invaluable advice for individual investors like you and me. First up, invest in index funds. Buffett is a big advocate for low-cost index funds, especially for those who don't have the time or expertise to research individual stocks. Index funds are like a basket of stocks that track a particular market index, such as the S&P 500. They offer a simple and effective way to diversify your portfolio and potentially earn solid returns over the long haul. Next, remember the importance of playing the long game. Don't get caught up in the daily ups and downs of the stock market. Instead, focus on the long-term potential of your investments. Avoid debt like the plague, especially high-interest debt like credit cards. Buffett is a firm believer in living debt-free. He's often said that the best investment you can make is in yourself by paying off your debts and freeing up your cash flow. One of Buffett's most famous quotes is, "Be fearful when others are greedy, and greedy when others are fearful." This simple yet profound statement encapsulates his contrarian approach to investing. When everyone else is panicking and selling, that's often a good time to look for buying opportunities. And when everyone is overly optimistic and rushing into a particular investment, it's time to proceed with caution. Knowledge is power. Buffett only invests in businesses he understands. If you don't understand how a company makes money or what its competitive advantages are, it's best to steer clear. Don't be afraid to do your research and ask questions. Reinvest your profits. Instead of cashing out your gains, consider reinvesting them to let the power of compounding work its magic. The more you reinvest, the faster your wealth can potentially grow. Outrow investing like Warren Buffett. Smart money tips for financial freedom. So there you have it, folks. Warren Buffett's timeless wisdom, broken down into actionable steps you can start implementing today. Building wealth and achieving financial freedom is a marathon, not a sprint. Remember, consistency and patience are your greatest allies on this journey. If you found this video helpful, don't forget to give it a thumbs up and subscribe to the channel for more smart money tips and investing strategies. And hey, I want to hear from you. What's your biggest takeaway from Warren Buffett's approach to investing? Let's continue the conversation in the comments below. Thanks for watching, and I'll catch you in the next one.